Hello. In today's video, we will share with you how Warren Buffett conducts his analysis of companies and chooses the best ones to invest in. It is important to note that the information we are going to expose in this video is derived from several literary sources, such as The Intelligent Investor by Benjamin Graham, The Essays of Warren Buffett by Warren Buffett himself and Warren Buffett and the Interpretation of Financial Statements by Mary Buffett and David Clark. For those who are interested in the stock market and would like to learn how to best perform their analysis, this may be a key video, so we will try to be as clear as possible. Quite possibly, you all know Warren Buffett well, so introductions are not necessary. However, we would like to emphasize that the information we are going to expose reveals the pure form of work by Warren Buffett that has made him one of the greatest billionaires in the world in recent decades, so if it works for him, it will work for you too. First, Warren Buffett's study focuses on financial and fundamental analysis, so it is not even necessary to be looking at a graphic to do technical analysis. As it was revealed in the movie Becoming Warren Buffett, he doesn't even use a computer. Unbelievable, don't you agree? Therefore, Warren Buffett's analysis focuses on 3 documents available by each company annually and every 6 months, sometimes, the income statement, the balance sheet, and the cash flow statement. We will now approach each document individually, so take a sheet and a pen, as you will not want to lose this information. An income statement provides valuable insights into a company's operations, the efficiency of its management, underperforming sectors, and its performance relative to industry peers. The first data Warren Buffett puts his attention on is in the data of the last 10 years of the company's net income, which must be profitable and consistent. As Warren Buffett states, consistency is the king. If the company shows good consistency in net income, then Warren Buffett goes to the analysis of the gross margin, that it is the sales revenue a company retains after incurring the direct costs associated with producing the goods it sells, and the services it provides. To calculate this data, the gross profit is divided by the revenue. Gross margin must also be consistent and over 40%. Why more than 40%? Because a high gross margin means more sales, which means more profitability. Finally, Warren Buffett analyzes the net margin data, that is one of the most important indicators of a company's financial health, obtained by dividing the net income by the revenue. A net margin of at least 20% is a strong result, revealing that we are dealing with a very smoothly run business. And about the income statement, this is the only information Warren Buffett needs. If the company has the recommended values, then he proceeds to the analysis of the balance sheet. A balance sheet is a financial statement that reports a company's assets, liabilities, and shareholders' equity. In this document, Warren initially focuses on calculating the current ratio, that is a liquidity ratio that measures a company's ability to pay short-term obligations or those due within 1 year, performed by dividing the total current assets data by the total current liabilities data. The calculated value should always be greater than 1, or 100%, and if it is greater than 1.5, or 150%, it is very good. Then, the growth of retained earnings, that is, the figure that is being added or withdrawn from each year depending on if the company is reinvesting its net income or not, should be analyzed. Warren Buffett likes to see a steady growth here. Then, to measure how efficiently a company is using these reinvested earnings, return on equity should be calculated, by dividing the net income, analyzed in the income statement, by the total equity. This value needs to show a steady growth, meaning that the reinvestments are profitable. Finally, Buffett looks for companies with little to no long-term debt. If a company can pay off all its long-term debt with less than 4 years of earnings, it's in a quite good position. This data, the years to pay off the long-term debt, is obtained by dividing the net income by the long-term debt. If the company has the recommended values in this statement too, then Warren Buffett proceeds to the final analysis: evaluate the data present in the cash flow statement. A cash flow statement is a financial statement that summarizes the amount of cash and cash equivalents entering and leaving a company. In this document, Warren Buffett calculates only one data: the percentage of capital expenditures, which is the money being spent on properties, plant, and equipment. This data is calculated by dividing the capital expenditures by the net income. Less than 25% is very good and less than 50% is acceptable. Simple, right? After calculating all these financial indicators, Warren Buffett also calculates the price-to-earnings ratio, or PE ratio, dividing the current stock price by the earnings per share. Buffett likes to buy a stock at a fair price, and, therefore, only buy when the PE ratio is 15 or less. Buffett also states that when the PE ratio crosses the 40 mark, it is probably better to sell the stock, as it may be overvalued. Obviously, this last data varies from investor to investor, because for those who intend to maintain the investment for a lifetime, this value is insignificant. And this is how the great investor Warren Buffett discovers his investments. Obviously, it is difficult to find a company with all this data within the recommended values, but when you manage to find one like this, Warren Buffett guarantees that you will not regret investing on it. Before finishing the video, we will leave a summary of all the formulas to calculate the financial indicators that we refer to throughout the video, so that it is simpler for those who wanted to point out. You can pause the video and copy all the formulas. Thank you for watching. We hope we helped you. We also have a page on Instagram where we make some posts about technical aspects of trading and investments, as well as updated news about the global economy. You can also check our free group on the Telegram, where we provide fundamental analysis every morning and share with you all the trades that our team carries out, with adequate risk management for each type of bankroll of course, and all the information you need to have, like us, success. Unlike many other groups that exist, we neither charge anything as nor require any registration at a brokerage by affiliate link, so enjoy our group. We will leave both links in the description. Don't forget to hit the like button and to subscribe our channel. Turn on your notifications bell so you don't lose any of our educational videos. Goodbye, and see you in the next video.